What's the worst it can get in property, and is it worth it? Hi, I'm Jaryd Krause.
And I'm Sam Powell, and we're the hosts of Property Pals Australia podcast. And in this episode, we're just getting raw and down with it all about purchasing property in Australia and the different emotional roller coaster you're about to go through. You're going through that, as well as the personalities involved. And there's pros and cons to both. And it was just a really great conversation to, I guess, enlighten you that nothing is easy, but there is always that silver lining for the whole rationale as to why you're doing this. And Jaryd has some really good questions and shares his experience through his commercial property buying journey at the moment.
Yeah, we talk about like the different parties involved, everybody from like just starting to get finance to building and pests to conveyancers to your buyer's agents, even your accountant setting up certain structures and stuff like that, and how one can contradict the other at times, and what you should do and how to navigate those borders, especially when you're spending hundreds of thousands to millions of dollars on a property, where the frustration can come out, and just how to get through it, and why it's worth staying the course. So a few golden nuggets there. I also asked Sam a question around worst case scenario and property prices falling. Sam gives a great scenario and how much it fell through the GFC in Australia, and then also towards the end of the pod talks about a suburb and how it went backwards and then came back if we just stick in the long game. So there's a lot of value in the pod. Obviously, it's not the only way we can help you for free. Get our How to Maximize Your Borrowing Capacity mini course. Just go to propertypals.au/resources and enjoy the pod. Welcome to Property Pals, the podcast where we share everything around how to build a property portfolio, from researching areas, financing, structuring, buying, selling, and reinvesting to live a life of financial independence. As a disclaimer, any information shared by myself, Jaryd, Sam, and the Property Pals team is strictly general and should not be taken as constituting professional advice. You should consider seeking independent legal, financial, and taxation advice from a qualified professional. Good morning, Sam.
Morning, Jaryd. We're all dressed in green today.
Yes, we are. Green with a vengeance, I think. We mentioned this in the last podcast that you had a bone to pick, but today we rocked up for everybody listening, and we're like, what should we? We've got some things that we could talk about in terms of like location research, but we just ended up talking about a deal that I'm going through, a deal that Sam's going through, and then just all the ego and shit and the people involved in property. And I'm not talking about all people. I'm just talking about like the system of it, and how to like save yourself time and money and frustration. At the end of the day, there's going to be some frustration, right, Sam?
Yeah, I mean, it's a stressful time, and there's a lot of money involved. Even going through building and pest reports, as we talked about, like still looking at $500 to $1,000, which can result in you're still not having a property at the end of it. But yeah, I didn't mean to dress in green. We're not going into some kind of battle or anything like that. But I guess the whole little rant that we just had, and thought let's just hit record, is because I want to keep this real with people, because everyone only gives you the pretty pictures in this whole process, and oftentimes it's not pretty. There's no perfect property in that sense. There's a lot of emotion, both on the selling side, the buying side. There's money being exchanged. There's people trying to do better for themselves and their financial future, and then they're sold the glossy brochure, and then they get dragged through the trenches sometimes. So I'm all about being transparent as possible, and I thought let's go for a little chat about it, and hopefully people can go in with their eyes wide open, because at the end of it, it does work. It is a vehicle to get you out of it. Like, big picture, inflation is a real issue, debasing of currencies, and looking at an asset or an investment asset such as property, which appreciates over time. It can help you get out of this rat race. So that is the reason we're doing this, and behind helping people understand property. But the same time, don't go in thinking it's going to be, just smooth sailing, because I don't know, you've gone through a lot in your life, Jaryd. Like, is it ever smooth sailing, mate? Does it ever, happen the way that you expect?
Dude, I just had a conversation yesterday with somebody. Oh, well, anyway, one of my mates, I met him on the Goldie. I've done a surf trip with him. He moved to Bali, and then he talks about me a bit to like a bunch of friends that he meets, and a bunch of friends do that actually, talk about like what I do and like in business and online business, and just wanted to chat. And I just went to lunch and we had a chat. He's looking at buying a business, and he asked me about my story and like just the craziness of what's happened in business for me in the last 11 years, like the ups and the downs, like making great money, like going backwards for 2 years, just spending cash, like spending $5,000 a month for over a year just to dig myself out of a hole. That's in business, and that's tough. And then, so it's those up and downs and roller coasters, and it's the same with property. And it's one thing to listen to a podcast like us talk about like, yep, bought this property, these are the results we got. How good is that? I think what makes that even sweeter is the work that each individual has put into that acquisition, right? And there's so much involved, and this is why it's worth having a team and somebody to help you along the way and go through it. But I'll just talk about my third acquisition here with commercial. Is like, first you've got to just set up a trust. Well, you don't have to, but I've set up a trust to buy it in for protection, land tax, all that sort of stuff. And then I've set up. You got a little dog there, Sam.
Got a little dog having a bark at you.
And then you've got to get your finance stuff sorted, and then you got to go hire a team and find somebody to go away and purchase it. And then through the purchasing phase, you've got like all these other people involved. And what makes it tricky is that every single person along the way has their own idea and own system and process on how it should be to acquire a property and what you should do. So for example, I got a trust set up, and my finance person was like, well, hang on, like, why is it set up this way? Shouldn't it be this other way? So having to change that based on the other way that my finance broker is looking at purchasing the property. And then through finance, you've got like, I don't know how many emails, and how many documents, downloading, uploading documents, like just to get finance. And it can be frustrating, and I can see why people just don't do it. The frustration on my end is like, I like it. Like I like when the frustration hits and it's like my back's against the wall, and I'm like, bring it on. I'll get through this because I know most people won't. And this is what sets myself apart. It's easy to just go, this is just frustrating too much, and walk away. Like so many people do that in business and life with everything. But I'm at the stage now where it's cost me a bit of money so far. And I've looked at a few deals, got serious in a few deals and paid a bunch of money. And what I've just learnt from speaking with you is that in this commercial property, the first one I purchased, it didn't go through because of DD, not because of building and pest. This second one that we're going through with a contract sign, I want to prevent having to pay too much money on the entry costs if needed. Excuse me. And realize that I've learned the hard way when I thought I would have learned, from the experience of people that I'm working with, is that I can get a building and pest. I should get a building and pest check done before I hire my conveyancers and spend $4,000 on conveyancing. Maybe I spend, like you said, anywhere between $300 to $1,000 on building and pest, and work out that, okay, there's this, right? I need to get that. And maybe I could do building and pest before I even sign a contract, or sign a contract and then get the building and pest done, and then get my conveyancers involved before I end up spending that $4,000 every single time I look at a property or do DD on a property. It just ends up adding up. You do that, 3 times, it's $12,000 gone. and it's something that I would have liked to have learnt from the people that I'm working with. But you can see that on their side, the people that I'm working with, they're like, they found a deal. It's really hard to find these good deals, and it's like, let's just do everything all at once to get it all, tied up and ready to rock, so we can actually acquire this. And they want to make sure that the acquisition happens, and I can see that on their end, which is great for me. But if it goes all the way and it doesn't work out, and it ends up costing me a bunch of money, so there's tricky waters to navigate, right?
Yeah, well, like there's always case by case, and it's to understand, I guess, the situation you're in is, you still want to get that contract reviewed before signing it, even though it's like a building and pest and finance, but all those additional checks, it all depends on what time frame they've put in to the contract. Like, is it a 21-day due diligence clause? Do they need to push it that hard in this environment? Because, like, unfortunately, I guess the favour is in with the sellers, because there's more buyer interest than there are properties to sell. So even like, it's a tricky environment. So you don't want to, lose a deal by asking too many and dictating too many terms from the buyer side, because as an agent and even as a seller, you sit there and go, well. And this is the issue too, is like, the more you do this, the more educated you get. There's a certain way of going about it, which is the best for the buyer. But with a low supply environment, you have to sort of make, I guess, not sacrifices, but a few different changes to appease the seller, because it's kind of like, if you want something, probably if you're going in there demanding something, you're not like, that person can put, like, there's emotion. There's so much emotion in this, so they can put their back up and go, you know what, stuff it. I don't want you additional, like 10 grand just because you got the higher contract price, as an example. I'll take the lesser because I don't want to deal with all that BS. Or what's more accurate in this environment is, well, I've got the same price or even a slightly higher price, but this guy's terms and conditions are more favourable, and it's easier to transact in. So, as a seller, you've got the variety of choice, so I think that's, like, there's many ways to skin a cat. You just got to understand the full crux of the deal. Not being I'm not the commercial buyer's agent that you're working with, but like, I'm sure there's a rationale behind why they do the things they do. But just logically, it's a process of elimination, right? Like, trying to protect your client's fees would always be that sort of the way that I like to try and go about it.
Yeah. I can see how it could lose you the deal as well. It's like staging things out, being a more difficult buyer, when a seller could be like, oh, I'll just get this person that's just going to do it all at once and expect the same amount of money. As a seller, I'd be going for that too. So I totally get both sides, and it's just worth sharing for people, because every single step of the way when you acquire a property, whether it's residential or whether it's commercial or anything, there's so many decisions to be made. And because you have, like I said before, is you've got one person telling you this is the way we do it in finance, this is the way we do it with structures or trusts, this is the way we do it with the contract, this is the way we do it with building and pest, this is the way we do it with all these different things. And then you got somebody else on the other side that could be completely contradictory to that, and you're in the middle, and you're like, this one person has said this and this other person has said this, what do I do? And that's where it can get emotionally fatiguing, when you've got this price point of a property, hundreds of thousands of dollars, millions of dollars, more for some people. It can be that weight of that amount of finance, and then the decision of like two key people that you think are supposed to be helping you, but are making it feels like it's more difficult because you're in the middle of like two different parties here. So either way, I think you just, in hindsight, the last two properties that I purchased, whatever decision I was to make, whether it was towards one side or the other side, didn't really matter. It was still going to work out. as long as I stayed the course. And I think that's the real juice here, is that just the decisions that you make, they're going to be difficult and tough, and there can be stress involved with it. But if you have have more of a level head and you're more calm, just make the decision and move on, rather than being stuck on it and having it cause too much friction, I guess. What are your thoughts on that? Because there's so many decisions there.
Yeah, well, when you break down that, you've got solicitor or conveyancer, same. Well, they'd argue otherwise. There's difference between them, but in the transaction process, a conveyancer does the same sort of role. But then you got the mortgage broker, who's obviously let's to get into the back end of the psyche of these different businesses, right? Like the mortgage broker wants it to go through because they don't get paid unless unless the funding goes through. So there's a bit of a vested interest there on that front. The buyer's agent doesn't get paid unless the deal goes through. Another vested interest there. But then their vested interest is primarily as you as a client, because that's how their business gets repeat and referral. And that's more like looking at a business that has longevity and has been around for a number of years. Is going back to why we only work with experienced people is key. But still, as an example, I'm dealing with buyers agents that they're throwing an extra 50 grand on a property up in Townsville compared to what I can justify, and that's why I can't justify buying in there anymore, because there's people that don't have the skill set of accurate analysis or good negotiation, and they're just I can't understand how they actually are convincing their clients to pay this and not stacking up on valuation. It doesn't compute with me, but that's what you're up against in regards to competition. And when you put someone in a corner, that's where the ethics and morals is very difficult to, I guess, navigate before signing on with somebody. Then you got, I guess, the solicitor and like the conveyancer solicitor. Your legal team is how I'll refer to them. They don't have a horse in the race. Like they're going to get paid regardless of what happens, and they're going to get paid the same amount of money. So generally they're more protective of you. So they fight a little bit harder on that front, but they can also fight to a point where they're not property people. So they might be fighting for something that, in hindsight, they don't understand the difficulties of actually finding this asset in this growth location. So they're like, "Oh, you're not going forward that. That's $5,000 to rectify. We're going to fight for that because we're here for you." But then you're sitting there on the back end going, "Well, I'm not willing to lose this deal over $5,000 because I know it's going to grow further in value and it's going to appease that. And if I don't go through with this as well, then I've got to go through this other whole." $4,000 in fees, on the back end. So it is an emotional roller coaster, and that's obviously why you work with people that do it every day to help guide you through it. Because without it, most people do just throw their hands up and say, stuff it's too hard. I'll go back to something else. I might go invest in shares. That's another whole education process. I might go just leave it in cash and just go, nah, stuff it. I'll go on a holiday and spend my money that way. But then your future self in 10 years is going to be like, oh shit, we should have done that. But
yeah, it's an interesting one with the conveyancer. And so the conveyancer, so for example, in this process, did a building and pest report that got sent to everyone, buyer's agent, myself, conveyancer, all that sort of stuff. And then the building and pest person was like, there's these few items that you should have your conveyancer request repair before settlement. And the conveyancer goes, yeah, great. This is part of my job. Like I can do that. And then what happens is you have your conveyancer go away and ask and request for these certain things, and then that could be tricky in the deal where the owner might be like, well, some of this is repairable, some of it's not, some of it we're not going to do, or we're not going to do anything here, or we'll do it all. And say, for example, they don't do any of it, then what can happen is there can be that friction in the deal, and then your buyer's agent is like, well, we want this deal to go through because we want to get paid. and it's a good deal, but we've got to like work out how we can work this out. And then the conveyancer is like, whoa, like, hang on a second, you shouldn't take this risk on. So you've got, two people that are trying to help you, wanting different results. And that means that you're in the middle. And at the end of the day, it's not the buyer's agent that makes the decision or the solicitor that makes the decision. They will give you the information, and then it's up to you to make the decision. And so that's where the buck always lies with you, and we're always responsible for whatever decisions are made in the deal, before the deal, as the deal is happening. And so you just really want to like try and get as much data and information as you can to be able to make this decision.
Yeah, it's a bit of an emotional roller coaster.
Yeah,
and I mean people do that. People shit all over real estate agents, right? They're like, what do you do to get paid the money you get paid? And like a lot of it is just dealing with human emotion and the high stress environment on that front. So, I mean, it always comes down to, like, it's not the norm going through multiple transactions, but it's always that case. And I guess that's the key thing about commercial. It is more expensive, to purchase on your fees. So you've got valuation fees, you've got conveyancing fees that are elevated, you've got building and pests that are elevated. So like it's not a cheap transaction, and that's something that you can't sugarcoat. But then if you're going in and your issue is spending a few $1,000s and losing out, then I guess that's the whole purpose of this pod, is to give people that realistic viewpoint from the commercial and even residential side. Like I always say, if it doesn't stack up, you got to walk away, because what's the point of inheriting like say a roofing issue? That's good. That could be $10,000 to fix. Like, is that worthwhile? Is it not? What does that lead to? Like you could be unraveling a whole bucket of worms in that sense, which you're just not aware of. And I mean, it does happen. So
yeah, it does happen, and that's why you pay for the building and pests and the solicitors and all of these things as insurance. So some would say it's money lost, but it's also money gained in a way, or protecting you from inheriting a liability too, which is important. It is important. It's just when it stings when it costs multiple times to do that exercise. And so when you've got people out there on podcasts and YouTube videos telling you like, this is the way, this is the process, you go buy a property, and it's you use these people and you do it this way. Yes, it can be done that way, but like we need to be realistic around like the each system is very different. How you buy a property with somebody in Queensland is different to buying in New South Wales and to Adelaide and everywhere else, and financing can work differently, and there's different like laws in states and clauses, and then how one finance broker approaches finance is different to another finance broker, and it can cost you, and it's not easy. I think it's worth it. It's definitely worth it, because you challenge yourself. The way I see it is like going through the process, it's challenging, right? Like I've been looking at buying commercial property. It's been like nearly 8 months now. And the amount of emails and documents and things that I've sent is ridiculous. But I know that if it takes me a year to purchase a good property, that challenge and that work is going to be so worth it, because I'm going to get the reward, right? The bigger the challenge is, typically the sweeter the reward is as well. And then it might take me a year to buy something, but if I have it for 10 years or more, the ROI just becomes infinite. So yeah, it's frustrating at times, but it's worth it.
Yeah, well, they say that a good investment can be a lifetime's work, and that's, I guess, the whole reason why I became passionate about this is my properties have gone up in value on a yearly basis. Obviously we've got the headwind of the lockdowns and all that in the last couple of years, but I mean, they've been going up in value, similar, or if not more than the wage that you take through the business. Like, And it's like, well, I literally, like, once you've secured it, you're literally doing a couple of emails, like checking up a few things. Like, it's maybe an hour of work a week, and you think about that, you're like, well, generally you're doing 40-hour weeks for work and you're getting paid the
What's an
same.
hour?
It's like, well, shit, you've just, what's 40x your, your income, return on investment, like your hourly rate, sorry. And it's just like, okay, there's the power. It's just a pain in the ass. But I mean, what isn't? If you're like, what isn't a pain in the ass is you just go, you know what, I want to invest some money. You throw it on I'll just go on an ETF and I'll throw it on that. But do you know what happens? You start tracking the charts, tracking the prices every single day. Those checking of the days you go through. I remember when I was trading currencies, I'd be like, oh, I was making, I was like, oh, I've made $2,000. How good in a day? Like, this is so easy. And the next day you lose $1,500 and you're like, oh, far out. And the next day you might lose another $1,000 and you're like, oh my God, I'm so sad. It's just the emotional stress. And you're like, is that, and you're doing it like once you buy it, like that's the thing. That's a beautiful thing about property for different investor types, right? Is like if you've got a medium to long term mindset and you're a buy and hold, or like that's the investor I've come to realize that I am, because I just like can't help myself if I'm doing day trading or short term stuff. Like I'm just looking at charts and I'm spending like more hours than you actually think. And the reality is like if you're taking that shorter term view, you're buying yourself a job. And I think as an investor, you should be medium to long term focused, because the whole reason why you're getting into it is to take yourself away from that, requirement to be in front of your computer or working. Does that make sense?
Yeah, absolutely. The faster that you want something, the more stress involved, because you have less time to achieve it. It's just so basic and simple and makes sense, but people just, when money gets involved and when when we want something so bad, that all that stuff goes out the window. I was also having a conversation yesterday with these guys at lunch, and we talked about like this guy, he wanted to buy an online business, and I was like, dude, like I think it's probably best for you to buy a property first, with what you're doing with work and your life and situation. And then we talked about like how he lost a bunch of money in crypto and all that sort of stuff. And I was like, well, looking at the 18.6 year market cycle, like how, like, what if you were just save up a bunch of money for a couple of years and then wait for things to go pear-shaped with all the markets and the property market, and then just buy something then. And then they asked, the guys at the table asked me a question. It's like, so if you're just taking your money from business and putting it into property, what if this 18.6 year market cycle is like there's 2 years of like a down? And I'm like, look, like I've got some money in different assets as well. So I've got business, crypto, and property. If crypto goes backwards, then that's way worse for me than if property goes backwards. For example, what's the worst that could happen if property goes down by 15%?
Yeah,
right?
well,
And for my portfolio, depending on my LVR for my different properties, it's like I'm gonna be okay. But if it went, if property goes down 15%, crypto is going down 80% or more, 90%, right? And ETFs and stocks and S&P 500, 200, all that stuff is just going backwards so much faster. Property is a lot slower because the transaction time is so much longer. So my question to you, Sam, is like, what's the worst, what's the biggest properties ever gone back, like down?
Yeah, good. I mean, markets within markets. Like you don't buy Australia when you're buying a property. You don't buy Queensland or New South Wales. So like, I'm looking at markets that, I mean, I can get something quite up, but some of the locations I'm targeting at the moment in, like say, Melbourne at the moment is a key location that is showing good signs of growth. So, looking at the cycles all the way back from, like, I've got data that tracks back to 2008, 2009. And they've seen, like, in the suburb level, the biggest drawdown I've seen on the suburb level is probably like 6%. 6 or 7% at like the worst, and it's only there for a maximum of 1 to 2 years. So it goes up and down.
Is that through the GFC?
Yeah. Well,
Yeah.
different, like GFC, and even during COVID with the lockdowns on that front as well. So it goes ups and down, and that goes from like I don't know if you can. There we go. Yeah. It goes into. I'm just messing around with my camera at this stage. It goes into like markets go up, markets go down, right? Like over the long term, property, because it's not just an investment vehicle, it's used for business as commercial, and it's also used for housing, which is like it's not a pure investment vehicle, which shares are, or crypto.
Yeah, people, like, worst case, people, like, at the end of the day, people need shelter. So if like people can pull their money out of the markets, but they're not just just sell up their home.
Yeah, and then
or just leave their rental property.
And this is I guess the reason for location research and why it's gone so heavy into the data is because you build confidence, because there's markets, like say that was like your major metro market, and some of them can be more cyclical because in a dense population people talk and there's a little bit more emotion involved. If you go out to some of the regional towns like Wagga Wagga or Bendigo, things like that, like during they actually haven't seen any negative price growth over the last 20 years, because it's a rural, like, diversified economy that people just get on with their lives. Just that, like, the employment levels don't change too much because it's more based around agriculture, and you need food, and you need logistics to keep the country going. Like, even in a financial turmoil, like, I mean, you've still got a population of 25 million people that need food, need shelter, need all the different reasons to, I guess, continue to live. So that's the importance of focusing on those areas. But from a growth perspective, I'd say they don't drop down too much, and it's usually usually 1 to 2 years of negative price growth. Around that. It ranges between negative 0.01% to sort of like negative 6%. Like I don't even think I've seen anything below a 6%. And then you sit there and go, crazy. Like, you shouldn't be. And this is the beautiful thing about property, is like, if it goes down 6%, like, it sucks if you bought at that peak, right? And then you saw the negative. But I'm telling you now, like, if you bought and then you've lost money, you've bought at the wrong location, because I'm looking at data where I can sit here and tell you, well, you're in a negative decline in that growth rate cycle. So if you buy this here, there's a higher chance of you going into negative growth. But everything is cyclical.
It's just.
Sorry.
No, you go.
That's just like I guess you don't know. The issue in the past was that people didn't have access to data, and they just go and buy, when they had the ability to, and they wanted to keep it close to home. They generally get caught up, like, going into, I guess, the theme of this whole pod too, is that there's like, the property industry is fraught with danger, and it's unregulated. I don't know if it ever will be, but there's a lot of money that's backing it, that gives it the security from, like, major business owners, politicians, international, like, influencers, like from the economic standpoint. Like, as an example, like, there's China, they're buying up all agricultural land in Australia at the moment, and even like Queensland Rail was acquired by a international company. You've got a Chinese company that owns the Port of Darwin. There's so much money and stuff being invested into Australia that gives me that long-term confidence. But I guess it's just trying to understand that there's people at play, and you, as an uneducated investor, let's call it, like, call a spade, you're doing your job, you're proficient at that. The world teaches you to go to school, get a trade, or go to university, and then go and work and specialize in a field. You can't be the best at everything, nor should you try to be. But then there's marketing businesses that specialize in convincing you to take your money to go and buy something, from a handbag. Like, that's not even an investment. That's just rubbish, but
Yeah.
Go down to the all right, I don't want to buy rubbish. I want to buy an asset because I know I'll need to invest in my financial future. And this is getting more and more prevalent because of the debasement of currency, where people, like in the past, you used to go and work at your job and you used to get paid quite well, and you'd have those luxuries of having the car and the house and living quite a beautiful family life. Now, with the elevation of liquidity and debt, people are getting addicted to that, and they're getting marketed to go and buy that $70,000-$80,000 car, because you can afford it because it costs you $400 a week. But that $80,000 car is going to be 40 grand in 10 years time if you buy a good one.
It's a liability.
Yeah, but also that's the opportunity cost of your debt is being leveraged into a depreciating asset, whereas you could have leveraged it into an appreciating asset and far outperformed. But people are trying to find that edge now because their incomes aren't keeping up with, I guess, the cost of living and that expectation of where we see ourselves. So a bit of a rant on that one, but what that is leading to is the psyche of people falling prey to, oh, that makes sense. And people there's business, I'm in the business, you're sitting there thinking, all right, how can we educate these people to understand this process that is best for them? But there's businesses that are out there that they're there to there's a demand for units, as an example. People want to live somewhere. There's a baby boomer population that's all downsizing. They're moving into these high-rise apartments because it's more efficient for their lifestyle. And I get it, lock up and leave. It's simpler, less maintenance and all that. There's a demand for that. But then you get the investors that, they're like, oh, well, that makes sense. I know I need to put my money somewhere. They're buying these units. They don't understand the intricacies of supply and demand because they don't put the time towards it. And you can also put the time towards it and go down 50 different rabbit holes, and you end up trying to be a developer. And then you go and go to a course and spend 20 grand on a course to try and be some developer, knowing full well that the people that are probably doing the course, that is a lot of money to outlay. And it's not just, I'll do this and it's a quick couple of $100 grand. It's there's so much more to it. It's kind of what I'm saying to people. So get educated, but also it's start in a place that is lower risk. And I think that's where that, buying established property in locations backed by data, can give you that confidence to start there, and then you grow into it. If you're going straight into commercial, it's a whole new thought process, and there is different fees involved. And then if you want to go further, you can go into development down the track, but you need to have some financial backing behind you to do this efficiently, and you need the interest and the passion to actually go and do it. Because investing is one thing, you can go and grow businesses, it's another thing. But if you're sitting there doing PAYG, expecting to earn the same income you've got, your wages don't keep up with cost of living anymore. So you've got to do something, unfortunately, and no one's going to give you the silver spoon. So you've got to get up, put your big boy or big girl pants on, and start figuring this stuff out, because the world's going to leave you behind.
Woo. Yeah. So property, coming back to that, why I asked is if property is I'm with you. You got to do something if you want to have a better financial future. And then when you compare property to the other markets, it's pretty safe when you understand the supply and demand. And I also understand that it's easier to just go and put your money in crypto or to buy a stock, because it's harder to acquire a property with the loops that you need to jump through to get finance and to get it happening. It's a slower lead time, which is also good for property because it makes it move slower and decline less. 6% drop through the GFC. I also went back and looked at throughout the 1929 crash in America, which was crazy. I think that had a 67% decrease in property prices. Sydney and Melbourne property prices fell from 11 to 13%, which is like after that 1929 stock market crash, which obviously takes a bit of time to trickle into other parts of the world, especially back then. So between 1931 and 32, it dropped 11 to 13%, which is like the worst. It's like one of the worst. That's also data from morningstar.com.au. And so, yes, our frustration with property is real, but it's worth it. That's how I would sum up the pod, really.
Yeah, well, it's also a different changing economic landscape. So, like back from the 90s, and it's always going to be evolving and changing. The biggest change that's come through is quantitative easing, basically, that came out during the GFC, where they realised that they used to control economies through the interest rates, as an example, like monetary policy and increasing and decreasing that to sort of help with that. But what they found is that if to get yourself out of a financial negative situation is you just start quantitative easing, you just start printing money, and you're debasing your currency. So it's deflating, the civilians' purchasing power because that dollar is getting lesser and less in value. But what it does is it stimulates that through different like major infrastructure projects, and they're pumping money into the economy, and then that's how they're starting to navigate this process where these negative price swings are becoming less and less. But what people aren't seeing is that, like, the true impact of what that really is, because you can still go through a tough economic time. Like even now, right? Like we haven't, from Australia's point of view, we haven't hit recession type periods. But I mean, the value of our purchasing power has pretty much been halved in the last 5 to 6 years. So, if you look at it like the cash on cash returns, factoring in inflation, we're actually in, like a negative. So that's something, it's really different. It was difficult for me to get my head around that initially, but there's a lot more smarter people out there figuring out this process, because it's, you think buying property is hard. Imagine running the country and dealing with the population of people that, they, it can get pretty gnarly. I mean, you get a group of people that are really unsatisfied. That's what leads to civil unrest and, conflict. And you don't want to be in that conflict environment, because all your thoughts about, what's my property doing? It goes out the window. You don't give a stuff about what your money's doing. You care about where's my next meal coming from, where's the safety of my family. Like, they're different problems. We're lucky enough to be in Australia. That's why I'm so bullish on it. It's just such an attractive place to live compared to the rest of the world. And more than anyone, Jaryd, you're one of the most travelled men I know.
Yeah, very lucky to be born in Australia. Very, very, very privileged with like access to work and how much we make. It's a golden ticket for a lot of people to move to Australia, really. There's living in Bali now. A lot of people come to Bali via Australia because from their own countries, because they just want to live in Australia and they want to get a visa there and make it all the time. So I totally get it. So guys, let's get into property in Australia while we can. And yeah, if you guys have any questions, let us know. hello@propertypals.au. We'd love to be answering your questions on the pod. And anything else to add, Sam?
Yeah, I did a little, but I had a look at Palm Beach, Gold Coast. This is a location, just to give you a bit of an understanding. Like it started going to negative growth territory in sort of like the start of 2010. It dropped down to a low of 6.46% in 2012. And so it dropped. There was a negative for that 2-year period, and then it went into positive territory back into 2012, and it stayed in positive territory, reaching a peak growth rate in 2021 of 26.22% in a year. So that's kind of like, it is less volatile. You don't get those bigger drawdown periods, but the longer term processes, if you can ride out those, potential 2 years of negative growth, the trend is your friend on that front. So it's like, don't shy away from it, but understand it. And yeah, any questions, you don't know what you don't know, so reach out. I'm happy to help. And no doubt it would probably turn into an interesting podcast conversation. So yeah, love all the questions.